It's been a great August for the bulls. But if I look at a very myopic kind of an market assessment, there are two markets which are outperforming. Within developed markets, US markets, within emerging markets, Indian markets. And the common thread here is that both these economies have a superior promise of growth and earnings.
I'm sorry, the question was very difficult to understand. I think the audio quality is a bit of an issue.
Okay, so let me rephrase it. If I look at the current set of outperformers, US markets are outperforming within developed markets and Indian markets are outperforming within emerging markets. And I guess the common thread here, Adrian, is that both these economies have a superior promise of growth.
I would agree with that. And I think you were making some comments before this interview started about a pickup in CapEx. There's obviously an election cycle for an acceleration in public spending. So, India does have a good fundamental story without some of the concerns that we're seeing in other emerging markets. And, to highlight those concerns, we do have trade disputes, which is particularly important for the Korean and the Taiwanese market, where you've got a lot of exporters listed. In China, they continue to be concerned about the level of leverage, and it's a slightly tighter monetary environment. Plus, you've got the disputes between the United States. Then moving into Latin America, we've got some very specific issues around Brazil and Mexico. I think the Argentine story really isn't a significant one for EM. It just tends to get a lot of headlines. And then in emerging Europe, some concerns around Turkey, and then some concerns around how much success Ramaphosa can have in South Africa. So India is sort of really sitting there isolated with having strong fundamentals. But it's strong fundamentals for the equity market. I think it is suffering from broad concerns about EMFX. And, we've got a 70 handle now on the rupee versus the US dollar. So it's a good absolute story for a rupee-based investor. It's still a tough story for the international investor to make absolute returns if they use dollars as their valuation currency.
Do you not worry about, Adrian, the repercussions that the currency may have and the bearing on the economic impact or the economy at large? Because, 71 are levels we haven't seen ever. It is a record low, and I'm sure it's going to have a bearing on the kind of macroeconomic picture that we're taking at, especially at a time when crude as well is a big niggling worry for the Indian economy.
Yes, I think it's a very important point here. So you reduce the flexibility of the central bank. But we also need to be very conscious that the bulk of the Indian consumers have relatively small amounts of discretionary money. And as inflation rises on non-discretionary goods such as energy, that will have an impact and may start to become politically quite sensitive. So absolutely, I think it's very important to think through the slow feed through of a weaker currency and how that impacts inflation and how that impacts the attitude of the consumer and maybe the attitude of the voter.
There have been many concerns laid on the growth numbers in India and whether the growth momentum can continue. The last reported numbers have a bit of a base effect that is playing out. But how much do you think the currency angle can help in the export contribution to the overall growth, or will it largely be dependent on domestic demand still? You yourself are propagating how stories like M&M and HUL would be key drivers of the domestic growth story.
Yeah, look, I should look at this from the perspective of the capital markets. And the capital markets are going to be focused much more on profits than necessarily on the GDP numbers. And remember that there are some concerns about how to interpret the GDP numbers with some of the changes in methodology. So I'd go back to looking at this from the perspective of the capital markets. And India does have a fair number of export earners in its capital markets. And clearly, they're going to be big beneficiaries of a currency that's weakened to this extent.
Adrian, what we're seeing in the market is that there is that leadership change which is playing out. And I'm only talking about the large caps here. So while up until a quarter back, it was only about the Reliances as well as private banks of the world, now you're beginning to see a meaningful comeback being posted by some of the corporate banks. So irrespective of all the news flow, there is a big move that we've seen in an ICICI Bank, in an Axis Bank, and all this has really transpired after their earnings. Do you sense that this leadership change could be long-lasting and perhaps newer hands could come into play in this market recovery?
I think it's too early to make that call. So let's also reflect on, yes, they've been performing well more recently, but they were extremely poor performers prior to that. And so significant concern that you were constantly going to get more bad news on provisions. Perhaps what the results did was they weren't as bad as the market expected, and you're seeing a degree of a relief rally. I think it's too early to say this is a sustained leadership. We've been here before where we thought the worst of the provisioning was behind these institutions, and then we went into another cycle. So let's be open-minded to the idea, but also continue to be somewhat cautious, because many of these bad loan issues are not going to be resolved just simply by a slightly stronger economy. They could be compounded by a weaker currency if they're using some external debt. So my view is it's a little bit of a relief in a sector that's been very oversold rather than a sustainable change in leadership.